Welcome to Veranda CA. We are going to discuss about charitable institutions, charitable and religious trust and institution. So it is typically about assessment of trust. So this is covered in chapter 13 of module 3. The importance of this area, the importance of this particular area in your examination is going to be around 10 to 15%. That is, this along with the next chapter of tax planning, avoidance, evasion put together, the importance is around 10 to 15% in your examination, which is around 10 to 15 marks. So 10 to 15 marks of your examination is going to be covered from these two chapters, and primarily the importance lies on this particular chapter alone. This chapter alone, the importance is there around 10 to 15%. So this becomes very critical as far as your examination is concerned. So this is part of your part A, that is domestic taxation relating to assessment of entities, that is related to the trust. Now in this particular chapter, so we first need to understand as an introduction, so what exactly does this chapter cover. So when you say trust or basically a charitable religious institution, it is typically categorized as non-profit organization. What do you mean by non-profit organization? As the word says, they are basically not for profit. So we are not trying to say that they are not going to make profits at all. What we are trying to say is their intention in doing some activity is primarily not profits. And then you have they support the entities that are involved, that is the trust is primarily for socio-economic development. So it is primarily to cater the socio-economic development of a particular society or a group of people. So that's what they give importance to. So what is their primary objective? It is philanthropic. So they wanted to do service, right? So that's what you mean by charitable. Sorry. So in this, if you actually ask me, we are going to cover this chapter as a whole as a segment. The first one that we are going to discuss about is about institutions covered under section 10 clause 23C. The next section that we are going to cover is between 11 to 13. Basically we are going to try to cover what are the procedure for registration of trust, what are the income covered, what is not an eligible income. So all this is what we are going to cover under this section 11 to 13 is what we will discuss there. And then you have section 13A, which is specifically for political parties, and 13B for specifically for electoral trust. So if you actually look at it, this 13A and 13B are specific to certain types of trust. So when you say trust, we are going to cover the 1023C as one section of institution and other things. 11 to 13 is how to categorize, register and all those things relating to income tax provisions for such institutions and trust and all those things. Then you have this political party and electoral trust. So this is what we are going to cover. But before we get into this chapter as such, we must understand what is this charitable purpose. We all know that charity means that you are going to serve, right? So you are going to serve the needy people. So that's what we all understand, right? It's a common word which we understand. The commonly called as NGOs. So who are basically into supporting various community or various segment or various purpose. It could be sports or it could be relating to a particular community or whatever it is. So this is what you are calling as the charitable purpose. So this is actually defined under section 2 clause 15. So I don't think I need to stress on this section 2 every time. Typically section 2 is always for the definition section. That is, whenever you are talking about Income Tax Act, most of the definitions are covered under section 2, and wherever required, the respective chapters or respective sections will have its own definition also. So that might be there. So what does this section 2 clause 15 says? It says charitable purpose includes the following thing. So the first one is relief for the poor. So basically supporting the needy people. The backward clause as far as your pay scale is concerned, that is below poverty line or poor people, what we are talking about, based on the earning capacity, the relief of the poor is the first thing that they are referring. Second thing they are saying, anything which supports education. So that's another category which they are saying. The third one is related to yoga. We all know last few years this has been a prime importance in India as such. We are trying to stress that this is what was introduced in India only, and so we are trying to put more importance and stress on this yoga practices. So yoga is also one of the charitable purpose. And then you have medical relief. So anything related to medical related activities is also covered here as charitable purpose. And then you have preservation of environment. When you say preservation of environment, is typically your waters, waterways, your forest and all those things, right? So when you say environment, you have forest, you have airspace, you have water space. So all these things, waterways and environment is what we are talking as. Waterways and forest is what we are calling it as environment. And apart from the environment, it is also about preservation of monuments. What is monument? The key, let's say, cultural heritage, right? So the locations or places or structures which provides this cultural heritage, which encourages the concept of historical value of our own country. So let's say a tourist destination or probably a temple or a museum or anything of that kind, which is basically which conveys, which expresses the cultural heritage of the country as a whole. So such places is also covered. So that is the one thing. And the last one, the most important thing, we'll call it as disclaimer clause. Being a chartered accountant, we all should be very familiar with this word disclaimers, because whatever we do, we always come out with a disclaimer. And income tax is also very good at this. We have been stressing this across the chapters. They always come out with disclaimer clause. So to cover everything else under one particular clause, to say that under this clause everything else will automatically get covered. So that's this particular clause. The debatable clause is this particular clause, because it says, let's just read it to understand what it actually says. The advancement of any other object of general public utility. See the wide range of coverage, right? So all the 5 clauses that we have been talking earlier is specific: relief to the poor, education, yoga. So it is all very specific. But when you talk about this, it's very general. It is trying to cover the whole set of thing. So the advancement of any other object of general public utility. So this is so wide. So when you say this advancement of object of general public utility, let's try to understand what is the intention of the income tax department. What is the intention behind this word of any other object of general public utility? When you say advancement, is some improvement, right? When some improvement is being rendered to that particular society or category. So that is what they are calling it as any other object of general public utility. So what does that involve? So they basically say it is not. They are trying to give a negative clause to say that if it is not so, then it can be categorized as general public utility. So they are not trying to say what is general public utility. They are trying to say what is not. What is not general public utility. So that's what they are trying to explain. So what is not general public utility? What will not be considered as charitable purpose under that miscellaneous clause? The first thing that they are trying to say is it should not involve any business activity. So when you say business activity, we are trying to say that it should not involve in any activity relating to trade, commerce, business. They are not talking about the concept like profit making, other things. They are trying to specify the activity. So you can't say, yes, I am into an activity, but that's not profit generating, so it will not be classified as business. So that's not necessarily the point. What they are saying is any activity of trade, commerce or business is not considered. And anything related to service, any service relating to such. So if there is something called as trade, commerce or business, if you are rendering a service to support such trade, commerce or business, then also it is not covered. So these are the two exceptions or probably 2 situations where it can never be called as the object of general public utility, where it will be covered as charitable purpose. So it's never possible to cover these 2 activities as charitable purpose as classified under object of general public utility. So other object of general public utility. So it can never be classified. So that's the point we are trying to say. So this is what you mean by the what is not condition. So generally when you define what is as the condition, or you say what is not is also a definition. So this explanation is about what is not. So other than these 2, probably if something falls under this concept of any other object of general public utility, you could be category. So from this activity, if there is anything that is being collected, that is if some remuneration, cess, fee or any other consideration, irrespective of thing, that's what I said, it doesn't matter about the profit. So they say it is irrespective of what? the nature, use, application, retention, income. So, nothing is irrelevant, but the activity is related to trade, commerce or business, or a service which supports in relation to such trade, commerce or business. It cannot be categorized as a charitable purpose covered under the clause of advancement of any other object of general public utility. So, this is what you are calling as this particular clause, the miscellaneous clause, the sixth clause which we are talking about under section 2, clause 15. When I say sixth clause, it is for our understanding, otherwise it is one single paragraph as a definition which talks about what is charitable purpose. So, this is, there are many disputes under this, whether something is called as a general public utility or not. So, something when it is serving for a common purpose, common need, for the benefit of a society, for the benefit of a section of people, it is called as a general public utility. So, it is wide, let us assume that, let us understand that it is so wide, and it is a miscellaneous clause. It is a disclaimer, kind of disclaimer, whereby they say anything else which is could be categorized as this could be called as charitable purpose, but there are specific no. We saw that no. So, clearly, I hope you all have clearly understood about the concept of charitable purpose, because this is what guides us to understand what a trust is and what all benefits can be claimed under income tax purposes for with respect to the charitable purpose, trust under charitable purpose. So, when we first begin, we said that we will be segmenting this, right. So, we will be understanding this charitable purpose in detail before stepping on to understanding what are all the institutions that will get covered under all these trust and education, the institutions that we are talking about in this chapter 13. So, when we said this concept of charitable purpose, there could be a scenario that yes, I am doing something for advancement of any other general public utility. Apart from that, I might also have other activities. So, what they are saying is, generally when we said no, these are not considered as charitable purpose under that miscellaneous clause, sometimes these things could be considered. So, what is this thing? Yes, there is trade, commerce, business, but they say there is an exception. First they said you should never have any trade, commerce, business, any service relating to that such trade, commerce, business. You should not have any fees, consideration, income from such particular activity, right. Now, there is a limit, they are providing a limit. So, they are saying if it is within that limit, it shall still be called as charitable purpose. So, the limit is basically, yes, I am dealing in trade, commerce, business, but it is in the course of actually carrying out my advancement. So, I need to do a service. To support that service, I need to do an activity which can be categorized as trade, commerce, business. So, in that case, don't classify as trade, commerce, business, because the purpose is not trade, commerce, business. The purpose is advancement of other object of general public utility to support that I am doing a particular activity. So, it is a support activity. The trade, commerce, business is a support activity, right. When do you call something a support? When it is not, when it is of a very minimal quantum, right. So, when it is not so huge, when it is a very minimal quantum of my overall operations. When you compare my overall operations, the proportion of such support activity, when I say support, it is very less. It could be a less percentage. They have categorized that support level. That support level is less than or equal to 20%. So, what they are saying is, the receipts from such activity, that is trade, commerce, business, or service relating to trade, commerce or business, from such activity the receipts shall be less than or equal to. In other words, the receipts does not exceed. In fact, it is a legal language. When you say it in legal language, it is does not exceed. In our own language, for understanding purpose, it is less than or equal to. So, it is does not exceed 20% of the total receipts. So, including such activity, apart from any other receipts, of the total receipts, if this receipt is less than or equal to 20%, then it could be called as still a charitable purpose. We can probably take an example, probably I do not want to get into the nitty-gritties of the example that I am trying to tell, but just for understanding. We all know there is an institution called CRI, right. So, this CRI supports various students in providing education to them. Of course, they collect donations and everything, they fall under this charitable purpose. It is basically for education or probably for the kids, right, for the students. Now, they also involve in publishing calendars, publishing notebooks and other things. What kind of notebook, what kind of calendar? It is all relating to what their students draw. it is hand drawn by the students, it's handcrafted by the students who are part of that CRY organization. So such people develop such notebooks and other things, that is printed and published, that is sold. So probably you can say that activity what we are talking in CRY, is probably in the course of, so that activity which you are talking in this CRY, which is publishing of calendar, notebooks and other things, it's probably in the course of, and such activity, if it is less than this, not more than 20% of the total receipts, then though it is in the nature of trade commerce business, they are publishing a calendar, they are selling a calendar, though it is a business activity, it could still be considered as a charitable purpose. So that's what they are trying to say about this quantum. So this is very important to understand what actually means charitable purposes. So hope now we are very clear about this concept of charitable purpose, so that we will move on to the next section, which talks about the institutions involved. What are the institutions that you are talking about as trust? Okay. First set of activities that we are going to talk about is covered under section 10, clause 23C. What is section 10? What is section 10? It is exempt income. Rather than calling it as exempt income, these are incomes that are not includable in the total income, not includable. So it does not form part of the total income itself. So that is what we are meaning by the concept of exempt income. Now in this particular situations, when you say, we are going to talk about each institution and understand is there any criteria involved in it. So the first thing that we are going to talk about is an university. So it could be an university or an education institution. What is their primary purpose? Of course, when you talk about educational institution, what should be their primary purpose? There is no, there's nothing to worry about it, right? So it's a very simple answer. So when you talk about an educational institution, their primary objective should be education. So that's what they are saying, existing solely for educational purposes and not for the purpose of profit. So of course, it must be an organization which is not for the purpose of profit. So that's a very basic condition. When we started the trust, when we said introduction, we said it is not for profit organization. And we also said they are philanthropic in nature, right? So that's the category that we are talking about. So it's not for profit, and which is wholly or substantially. When you say wholly or substantially, it is either 100% or substantially. So when you say substantial, they might have a substantial interest in the holding of that particular entity. So that's what you mean by substantial interest. Let's say 51%. 51% is basically called as substantial interest. So this substantial interest is what we are calling it as the investment to be made by the government. So now it must be made by government. So it is an organization which is typically supported by the government. It is either wholly or substantially supported by the government. When you talk about wholly or substantially, what they are saying is, okay, in some cases, you may not be actually owning that institution, but you may be giving them a grant. You have various educational grant. I guess there is something called UGC grant, which is for various and you have funds for this PhD and other related thing. You have all such things, right? So such things. So it includes government grant. When you say government grant, the proportion that it's saying is that government grant should be more than 50% of the total receipt. This is provided in Rule 2BBB. So where it says, if generally in the section in clause 3AB, it says in subclause 3AB, it says more than prescribed amount. So Rule 2BB says if the grant is more than 50%, so either they own in management or something, they own more than 50%, or through government grant they are giving more than 50% of the total receipts. If this is actually applicable, then this will be an institution covered under section 10, clause 23C. Similarly, it could be an hospital or other institution, same thing applies, that is wholly or substantially by the government, or it also includes this government grant which is more than 50%, that is greater than 50% of the total receipt, as we discussed earlier. So in this case, it will be covered under 1023C, but there is few more things. As we said, this university for education institution should be solely for the purpose of education. What for should the hospital be? Very good. So when you say this hospital or institution, this existing solely for philanthropic purposes. So as we said, the purpose of such hospital should only be for the purpose of not for profit. It should only be for the purpose of philanthropic, that is charitable activities. So that's what you are calling it as, existing solely for the philanthropic purposes. And the next one is for reception and treatment of persons. So it is purely for the treatment of persons. So when you say health, it's not something like wellness center. What they're saying is suffering from illness or mental defectiveness or the reception treatment of person during convalescence on of persons requiring medical attention or rehabilitation. So basically it includes medical problem including mental issues. So all this is covered as the activity in which it is covered. So this is what you are covering under this 3AC. So that's the clause that we are talking about. The next is 3AD. 3AD talks about, again it is about university or education institution, again it's about existing solely for educational purpose, but here it is not about government organization that is wholly or substantially supported by government. It's not about government organization. It is about the aggregate annual receipts does not exceed 5 crore. So when you say aggregate annual receipt does not exceed 5 crores, the total gross receipts of such institution cannot exceed 5 crore. Earlier this was 1 crore. So now this 1 crore is increased to 5 crore. So there is an amendment to this. So now it is what is currently applicable is it is 5 crore. So this is what is called as an eligible institution under subclause 3AD. And subclause 3AE is for a similar condition for an hospital or institution. So again its aggregate turnover is does not exceed 5 crore, and then it is exists solely for philanthropic purposes and not for purpose of profit, and you also have this what is the purpose for reception, treatment and all those things whatever we discussed earlier. So everything remains same. The first category was for wholly or substantially supported by the government, right? Whereas here it is about the turnover, that is aggregate annual receipts does not exceed 5 crore is 3AE. One thing that we need to consider, in this 3AD and 3AE, that is in this section, that is this and 3AE put together, it says the 5 crore limit is put together. Let's say there is one person who is also running a school, that is who is running an education institution, also running an hospital, saying that this aggregate turnover is annual receipts is less than 5 crores, it does not exceed 5 crores. So he is claiming exemption under section 10 clause 23C. Is he eligible? If he has institution which is also an educational institution, which is also a hospital, both put together, it should not cross 5 crore. If you actually see, there are many medical colleges which also has an hospital, right? So there will be one trust for probably for the college, for the educational institution, and one for the trust. So in that case, both put together should not cross 5 crores. Only then they are eligible for an exemption under section 10 clause 23C. And the other one is any other fund or institution established for charitable purposes, whatever we saw in section 2 subsection 15, clause 15. So what is that importance of the charitable purpose? It should be for the importance throughout India or throughout any state or state. So it is should be for the importance of the particular country, So nation should be put at first. So it is for the development, advancement of the nation as a whole or a particular state as a whole. So if there is any activity, whatever we saw in 2 clause 15 is for the purpose of nation's development or given importance to India and states, then that will also be an eligible fund or institution. Then you also have any other religious purpose or religious and charitable purpose. So this is also covered as an fund or trust under 1023C. And then you have any university or educational institution not for purpose approved by the prescribed authority. So this is another clause, both this. So basically both educational institution and hospital, whatever we have covered earlier under 3AD and 3AE, 3AD and 3AC and 3AE, whatever was covered here, whatever was covered there, everything else, that is hospital was covered in 3AC and 3AE. Apart from this, whatever has been approved by the prescribed authority. So typically what point is, we have an educational institution and hospital. In these two, we have one category which is supported by the government, another category based on the annual receipts less than 5 crores. The last category is basically based on the approval by the prescribed authority. So these are the three categories of educational institution and hospitals. Apart from that, we said charitable purpose, religious and charitable purpose. So these are the overall thing. Hope it is easy for you to remember now. So there are 3 educational institutions, 3 hospitals, and then you have one charitable and religious purpose. All this put together is what is covered under section 10 clause 23C. Okay, now for all these 10 clause 23C, we must understand what is the procedure for application to basically what? To make it an approved fund or institution or whatever. So, what is the process? So, now there is this rule 2C which provides the basis of these things. So, what do they say is, if it is an institution already approved under 1023C and it is continuing on 1st April 2021. So, on 1st April 2021, it is already an existing approved institution. In that case, the time limit for application is on or before 31st March 2022. So, whatever application you are talking about should be filed before on or before 31st March 2022. In fact, this 31st March 2022 is not a straight deadline. As of now, because of this COVID and other things, it was extended to this 31st March 2022. Otherwise, it is only 3 months. So, now it has been got postponed due to this COVID situations. Finally, the deadline is 31st March 2022. It has been given in circular 16 in the year 2021. So, currently the due date for filing this form is 31st March 2022, and the form that needs to be used for filing this is 10A. So, the application has to be made in 10A. Once it is made, from that month end, now let us say it was actually applied in 20th February 2022. Now, what happens? The month end is 28/2/2022. So, 3 months from this, right? So, March end, April end, May end. So, 31st May 22. Before that, an order has to be passed. That's why they are calling it as 3 months from the application month end. I will not explain this concept subsequently, because across this chapter of chapter 13 for trust, we will be seeing this word application month end. So, the month end in which application was actually filed. So, that is the period. So, the 3 months in our example basically ends on 31st May 2022, right. So, that is the time limit to pass the order. So, once you file an application in 10A, the order must be passed within 3 months from the end of the month in which application was actually made. For what period they are giving an application, that is what period they are granting this approval, they are granting it for 5 years. When does this 5 years start? From the assessment year from earlier approval. So, there would have already been an approval, right. So, for that approval, from that approval assessment year, it shall continue for a period of 5 years. So, that is what they are calling by from the assessment year of earlier approval. So, whenever it was actually earlier approved, from that assessment year of that, from that year 5 years is concerned. So, that is the first thing. The second category, now there are provisions that is amended, right. So, there are new provisions in how it has to be registered under rule 2C. So, under this case, what they are saying is, institution which is already approved under amended provisions, that is under this new rule 2C, they will have to renew it, right. They will have to renew it before the expiry date. Of course, they will have to do it before the expiry, so that they continue to be an eligible fund, an approved fund or educational institution or hospital. So, that has to be done at least 6 months, before the expiry of period. So, let us say the expiry of period is 31st March 23. So, 6 months before that, is what? So, you come to, if I am right, it has to be October, right. So, October. So, it has to be done at least 6 months before. So, before 6 months. So, it has to be filed before 30th September 22, on or before 30th September 22 in form 10AB. So, it has to be made in that, and time limit for this is 6 months. So, there you will have to file an application within 3 months from the year end, and you will have to actually pass an order within 3 months. Here it is 6 months before the expiry date. Order also has to be passed between 6 months from the application month end. So, in this case, the application month end, let us say you are actually applying in September 10th, 2022. The month end is 30th September 2022. You should actually pass an order before 31st March 2022. So, that is a simple thing. So, here also we are using the word application month end. So, this is also for 5 years. This follows from the application financial year. So, assessment year immediately following the application financial year. So here the financial year is 2021-22. In the example that we spoke, the actual financial year is 2021-22. Now 5 years from this, so that will be there. So it is 23, 24, 25, 26, 27. So it is 20, 26 to 27. So that's the 5 year for this particular category. The next one is institution which is provisionally approved. So earlier there was no provisional approved category. There was no such category, because you will have to register as a trust or an eligible fund only after you have a decent track record, you fall under all the conditions, all those things. So now what they say is, moment you probably, let's say you start institution, immediately once you start an institution, you can actually file for this application. So institution which is provisionally approved fall under this category. So once the first stage of approval is provisional, moment they are provisionally approved, whatever that provisional period is, 6 months before that period or commencement of activity. So in case if you are actually commencing activity, it is within commencement of activity. So in this case it is within. So either it is 6 months before the expiry of period or 6 months after, that is commencement of activity. So you take, once you cross the commencement of activity, you need to do it within 6 months, whichever is earlier. So that is what you are calling as. So within commencement of activity or 6 months from the expiry of the period. And what time? Same what we discussed. If it is 3 months, here order is also 3 months. If that is 6 months, here also it is 6 months. So 6 months from the application month end, and it is valid for 5 years, and 5 years from the time provisional approval was granted. So time assessment year from which provisional approval was granted, from that period it is valid for 5 years. In any other case, that is for provisional approval, for whatever case we are talking about, in any other case, 1 month prior to the commencement of the previous year. So if you are actually looking at for for the previous year 22-23. So if you are looking for an approval for previous year 22-23, that is 1st April 22 is the first date of that previous year. It is 1 month prior. So it is before 28 February 2022, you will have to file an application. Since there it is 1 month, here also it is 1 month. Everywhere you see, there it is 3 months, here also 3 months. There it is 6 months, here also 6 months. So the time limit for passing an order and time limit for filing an application, both are same. Only thing is the time limit for passing order starts from the time when you have actually filed your application. So that's what it is about. So 1 month from the application month end. And period is granted for 3 years immediately following the financial year of application. So if you are filing on let's say 20th February 2022, this is you will be filing it in this particular year. Now you are eligible for the assessment year immediately following the financial year. That is, it will be applicable for 2022-23. So that's what you are calling it as assessment year immediately following the financial year of application. So the application is financial year is 2021-22. So assessment year immediately following the financial year. So that's what we are calling about. So this has to be made. Earlier it was supposed to be made through manual process before the principal commissioner or commissioner of income tax. We will be fondly calling them as site. So now it has to be filed there, but now it is currently online process. So you have to file it online. It of course goes to this authority only. So they might call, so they might do an enquiry as if they are doing an assessment. So they might call for an enquiry, whatever they think is actually required to be understood, whatever they think is actually genuine. So all that has to be requested. So they can make any enquiry that they wish to. So it's something like your 140, 143 assessment. So all those things, right? So they have the power to discuss it in detail, call for information and request and discuss all those things. But is this alone sufficient to be called them as a 10 clause 23C? Yes, they might get approval, but to claim exemption, so whatever we saw now is for registration purpose, but to claim exemption, they need to apply its income or accumulate it for accumulation. So they must either apply or accumulate it for application wholly and exclusively for the objects which is it established. So, if the object is educational institution, it must be applied or accumulated wholly or exclusively for the purpose of education, right. So, that is what it is. And is it possible, right. So, probably when you are actually earning money out of it, you might be earning let us say 100. Can you spend the entire 100? Is it possible? You have raised receipts. Is it possible to actually spend 100? It is definitely not. It is definitely not. So, sometimes you may not be spending this 100. You might be spending something lesser. Now, they have given a comfort level for this too. They have said in case where the more than 15% of his income is accumulated, that is, you can accumulate 15% of such income to say that I will be spending it in future unit. So, where more than 15% of its income is accumulated, the period of the accumulation amount exceeding 15% of income shall no case exceed 50 years. So, typically what they are trying to say is, if it is 100, you must spend 85, you can accumulate 15. But now what they are saying is, this 85 also can be accumulated, but it is only for the period of 5 years. So, exceed 5 years, it can only be up to 5 years, it cannot exceed that. And such amounts, whatever has been accumulated and other things, can only be invested in a mode specified under section 11.5. So, whatever has been accumulated can only be spent towards this instruments given under section 11 subsection 5. But there are certain things, again exception or disclaimer, whatever you wanted to call it. So, these are all very old things. So, assets from part of corpus fund as on 1st June 1973. So, all thing. Similarly, there is a condition for 1st June 1998. I am not going to go into this because of course, these are all very old dates. If you have such old assets or debentures, whatever has been listed here, then it is there. And apart from that, whatever is an accretion, what do you mean by accretion? It is an addition, natural addition. It is not like I bought 10 shares, I am again buying 15 shares. This is not accretion. I have bought 10 shares, now company is giving a bonus on 1:1 ratio, so I am again getting another 10. This is accretion, it is a natural process. So, this accretion is a natural process. When you say natural process in shares, what does that mean? It means bonus shares. So, that is what is there, part of the corpus fund by way of bonus shares allotted. And it will also include voluntary contributions received and maintained in the form of jewellery. So, this is also an allowed thing. So, this is also allowed where they say that whatever is there happening, the base section is section 11.5. So, they can receive these voluntary contributions and maintain in the form of jewellery, furniture or any other notified article for any period during the previous year otherwise than in any one of the forms of prescribed under section 11.5. So, these are the conditions about these things. And another exclusion that they are talking about is whenever a money is received to the trust, let us say the income, whatever is received should be revenue in nature, right. So, when you say revenue, someone is giving a donation, you are immediately spending it, that is called revenue receipt. When you say capital receipt, someone says, see, I will give you 10 lakhs, you do service from the interest that 10 lakhs generates. So, what it becomes is, it is given in a specific direction, to form part of corpus fund, right. So, it is in a specific direction to form part of corpus fund of such fund and institution. So, when I give the 10 lakhs to that institution, I say, see, my instruction is very clear, I am directing you to deposit into the corpus fund. When you say corpus fund, it is like capital fund. So, I want you to deposit into the corpus fund and do not use this for regular things. So, such things is not an income. Why? Because it is capital in nature. But there is a small changes from this from assessment year 2022. Again, it is a very recent amendment. So, in case of such contributions, that is with respect to this whatever is given, let us take my example itself, I have given 10 lakhs to someone saying that it must be part of corpus fund. So, whatever such contribution received with a specific direction shall form part of corpus. Such funds, such 10 lakhs must be invested or deposited in one of the modes under section 11.5. Now, once this is not done, that failure will lead to corpus donation as income. So, which means whatever we said it is not an income, now it will continue to be treated as an income if such funds, corpus fund is not invested into a eligible activity, that is whatever is allowed to. So, however, if they are into this business of PGBP, this provisions does not applicable, where the business activity and the whatever objective of the trust is goes hand in hand. So, and also there is a separate books of account for the business and the donation, the fund trust that we are talking about. So, that is what is there. So, in that case exemption shall not be applicable to PGBP. So, except where such business is incidental to attainments of its objects and separate books of accounts are maintained. So, that is what it is about that. So, whatever we are talking about, the exemptions to under this section 1023C is not available when it is reported as PGBP. However, if such income is because of an activity, as we spoke about this CRY. So, if CRY is actually making money through a trade, commerce or business, through selling published calendars and notebooks, whatever money comes, it is attainment of its objective. So, that is what it is they are killing. So, once separate books are maintained, then this clause will not be applicable, that is exemption shall be provided. So, these are the things that we are saying, that these income whatever we are saying will not be included in the firm's receipt that we are talking about. And whenever when it exceeds basic exemption limit, audit has to be carried out. So, trust also followed the regular slab rates. So, when it crosses this basic exemption limit, it must be taxable. So, in case if the total receipt is crossing 1 crore or the rule of 10 crore, whatever the rule that we are talking about, if 44 AB is applicable, it shall continue to apply here. So, that is what is about the other procedure with respect to this section 10 clause 23C companies. Now, when we were actually discussing, we spoke about this corpus fund, right, something like your capital, where someone gives you a money, a bulk money. In our example, I said I give 10 lakhs, I give 10 lakhs to some trust. So, that 10 lakhs being a corpus fund, being capital in nature, that whatever I have given is capital in nature, it shall not be categorized as revenue. So, it is not part of the income itself, right. So, there is no treatment of such 10 lakhs as an income. But now, in this 10 lakhs, we said if it is actually invested into the mode specified in 11.5, only then it is called not income, otherwise it will be treated as an income. So, that is fine, right. So, let us say Muthu gives 10 lakhs to some trust, okay. Now, this trust will deposit in a mode specified in 11.5, only then the what you call this particular thing is not income under 1023C. Now, from such fund, whatever you are applying, whatever you have received as corpus, when you are applying, it is eligible for, it shall not be considered as an application, because it was not an income earlier. So, it is not an, since it is not an income earlier, application should also not be claimed. But whatever is being specified under 11.5, in this case, whatever is being done is actually a utilization. Other than that, it should not be considered as an application. So, apart from this, no application. That is, it is not considered as an application apart from this particular thing. So, that is what utilization of corpus fund. So, such application, that is what I was just saying now, such application of such corpus fund is not considered as application. So, it is not application, because it is actually, it is a corpus fund under specific direction, it is spent for various purposes. So, it will not be considered as an application for thing. But however, in case in a subsequent year, whatever has been invested, they have got back the money, they are again investing back in the mode specified in 11.5, in that year they can claim the benefit. So, shall be considered as an application in the year in which actually being deposited to 11.5. So, in short, whatever corpus fund is being given under specific direction shall not be considered as income, provided such funds are actually deposited under section mode specified in 11 subsection 5. Similarly, whatever utilization is not considered as an application, but whatever money they have put, if they have got back and again invested into mode specified in 11.5, then that shall be considered as an application. So, what happens to this accumulation? So, whatever contribution, so I am getting some fund out of this accumulated income, So if I am actually giving to any trust, what is this accumulated income? Something like a 15% plus, right? So that income, now I am giving to another trust under section 12AB. We'll come to this little later. This is a very new section. It is only applicable from the current year. So this under 12AB or to any specific provision shall not be treated as application of income. So such accumulation, that is, I have accumulated, I am actually not spending, I am just giving it to another registered trust and say, please spend it on my behalf. So that is not actually called as an application. Similarly, if you are taking any loan borrowing, payment for loan borrowing, so application from loan or borrowing, you have got a loan, from that you are applying, that is not considered as an application, but repayment is considered as an application. So utilization of such fund is not application, but repayment of such fund is application. So utilization versus repayment. So utilization is not what? Is not application. Utilization is not applicable, whereas repayment is application. In case of assets, if the entire cost of asset is considered as an application of income, then no depreciation. So depreciation shall not be allowed if the cost are already treated as application. So it is not allowed if the cost of asset is actually considered as application. Very simple logic. Since you have already claimed 100%, right? When you say application, you would have claimed 100%. Then since you already have 100%, your value of asset is technically what? 0, right? So you need not calculate depreciation. And any other provisions, applicable provisions, 40 clause A subclause 1A will be applicable to this provision. Similarly, 40A3 will also be applicable, 40A3 also will be applicable. So what is 40A1A? It is domestic TDS, right? It is whatever 30%. So we discussed about 30% in profit and business. So it's basically in TDS chapter we had discussed that 30% of such expenditure will be disallowed and will be allowed in the year of payment. And 40A3 is cash payments, what? Greater than 10,000 is not allowed. 40A3 is also same concept, but earlier it was accounted as payable, now I am paying. So it is not current year's P&L, it is earlier year's P&L, which was actually accounted as a, let's say, a payable. Now I am actually not, I am actually paying, but I am paying it in cash. So that is also considered as a disallowance. So these are the three provisions which is actually applicable to this section 10 clause 23C units also. Apart from this, we already discussed, when you say commercial activity of even education institution or hospital, it shall be okay if it is less than 20%, and whatever is called as anonymous donation. We will see this in detail in a separate slide. So I am not going to open my mouth even a word about this. So we will see this later. Just the word anonymous means I do not know who gave me. I do not know who gave me, but I have got some. So the treatment is discussed in 115 BBC. So that is there. And the authority who actually gave the power also has the power to withdraw. So they also have the power to withdraw. So it is like they can withdraw the power provided that they have their reasons. They must have their reasons. The allowed reasons are it was not applied properly, it was not genuine case. So they had their own issues with respect to approving that. So they feel that it is not genuine, and whatever was approved was not properly followed. Whatever was approved or whatever is in accordance with the law is not complied with. So it is probably you need to apply within a particular time, 3 months, 6 months, 1 month, whatever we saw earlier under rule 2C. So rule 2C. So under this rule, whatever we have to apply, we have not applied, then this is applicable. Then if the application is not genuine, or if it is not per the approved condition, or it is not in compliance with the law. So these are the concepts of, these are the funds and mechanism of income for section 10 clause 23C. The last area that we will be covering is section 11. What is section 11? It just talks about what is the income of a particular trust. So it could basically be a voluntary contribution and any income derived from the property. So these are the two income. So an income is treated as an income only when such income applied to such purpose in India. So it must be spent for some purposes in India. It could either be for holy or charitable purposes or any other purpose which is created before 1st April 1962. What is this 1st April 1962? It is basically the income tax rules. Income tax rules came only from that period. So anything before that, will still be applicable. So such purpose created before 1st April 1962 under the earlier act or whatever, that is still okay. So otherwise the entire income has to be applied for the purposes in India wholly for wholly, it's not even wholly or partly, it is wholly, that is 100%, right. So that is the one, and such income applied to such purpose outside India. What happens if it is actually outside India? Then this should fall under either of this, that is promoting international welfare on or after 1st April 1952, created before 1st April 1952. Don't ask me why 1952 is here, there is no reason, it could be something else. Only because this 1962 had a reason, I probably explained you. This 1952, we just need to understand. So this 1st April 1952 was the date. So whatever income is applied for the purpose of outside India will not be considered as an income. And any other voluntary contribution, provided that such voluntary contributions are invested in one of the areas specified under 11 subsection 5 if they are depositing. Otherwise, they actually have to utilize the money. So it's either you utilize or you accumulate. So that's what it is. So whatever exemption that we are actually applying outside India, so if someone is going to gain through outside India because of this trust activity in India, then CBDT has to direct by special or general order. So whatever order they are passing will be a general or special order. So these are the things under section 11. And here also, similar to everything whatever we discussed earlier in the 1023C itself, so it is not possible to apply the whole income. We discussed this. So what happens? You either apply or accumulate. So remember this word, you either apply the voluntary contribution or accumulate the voluntary contribution. What is the ratio we saw? We said it is 85, 15, right? So this is what is what you call receipts, right? So in this receipt, this is apply, this is accumulate. So this is what you do. So that's what we have given as a pictorial representation. And then what if there is non-application of 85% itself? Yes, I need to spend 85, but let's say I actually had 100, out of which my receipt of 20 was on 31st March 22. Now I need to spend it on the same day, right? At least 85% of this 20 I need to spend it on 31st March itself. Is it possible? It's very difficult, right? So what happens is, if income not received in previous year, that is if it is not received at all, so the 80 is actually not received at all. So if its income is not received in the previous year, apply in the year of receipt. So in the year in which they are actually giving us the order or receipt or whatever, that is the year. Next previous year of receipt. So in case if it is getting delayed, when you say this is let's say you had a receipt in 2021 on 31st March 2021, now you automatically file such income in the next year, that is in financial year 21-22. So that's why I said next previous year of receipt. So that's what they are saying. So if you are not able to claim it in the year because of genuine reasons, because it was actually not received, so in that case you can claim it in the subsequent year. If it is only because of what you call only because of being the last year period, last date or something, then in that case treat it in the next year. So that's what they are calling it about. So any other reason, if there is any other reason, then we actually immediately following the previous year. So that is what is there. So if it is again, if it is 20, 21, 22, we will have to apply in 22, 23. So that's what it is. And that such application, if your actual whatever you should have applied is 80, which has come on let's say 31/3/22. Now what can be spent here, what can be considered as an application is only 80. Of course, it cannot go beyond 80. So application made from corpus donation shall not be treated as an application income. It shall be treated as application only in the year in which it is invested under section 11 subsection 5. So that's what it is all about. Can you accumulate over and above 15%? Of course you can. We already saw this. Yes. So according to section 11, 15% of the income can be accumulated for an indefinite period, that is 15%. But when it comes to this 85%, the maximum period is 5 years. 5 years, provided the following conditions are complied. What is that? To also accumulate this 85, to also accumulate this 85, let's say you have 100, you need to spend 85, you need to accumulate 15, you may accumulate 15. Now in this 85, you are actually only spending 60, you have 25. Now what happens is this 25 actually can be furnished in form number 10 to the assessing officer in addition to the form, in addition to the regular income tax form. But the due date is before due date of filing return of income. So that's what they are calling it about. So before the date, it must be filed. The money so accumulated, that is whatever has been accumulated, is invested or deposited in section 11 phase 2. Again claim depreciation or whatever, it may actually be invested in the mode specified under section 10.5, 11.5. So what are these things that we are talking about? So whatever provisions we discussed in 10.23, like there is utilization of corpus donation, that is whatever has been given as application corpus fund, when you apply, it is not an eligible application. But again, when you get back that money and then invest it in invest it in the mode specified under 11.5, then it becomes an utilized income. Similarly, application of loan borrowing, same concept. So let me not repeat it. Accumulated income to any trust. So when you are actually accumulating and giving it, that's not an eligible application. And what are the provisions applicable from PGBP chapter, and then depreciation rules. That is, when you have actually when you said depreciation, when the cost of asset is already claimed, then in that case this depreciation will not be acceptable. So I am not going into each one of this 11.5. You can always go through the institute material and see what are all the eligible investments and deposits, because these are all just list. There is nothing to explain it about. So all these investment and deposit that we are talking about is what is eligible as 11 subsection 5. Apart from that, they also have a clause any other prescribed mode. Yes, there have been some prescribed modes that is also provided in the material. So you can always go through it in the material to understand what are specifics. But overall, whatever is allowed under 11.5, these investments and deposit is the only thing that could be considered. The last one that we will be talking about here is what happens when there is an income from transfer of our asset. So you have actually sold the asset which was actually being used for charitable purpose. This is an income. Now you are using that to purchase another capital assets. What happens? So when it's wholly used for charitable or religious purpose, the thing that will be considered as an exempt income will be lower of capital gain or cap cost of new assets. So that's what will be considered as the lowest, similar to your exemptions that you discussed in capital gain, right? So the capital gain or the cost of the new asset, whichever is lower is the exemption that you're talking about. In case if that asset is actually used partly for charitable and partly for some other purposes, not charitable or religious purposes, then it must be done in fraction. So let's say if 30% is trading activity or 10% is trading activity, 90% of that was covered as charitable purposes, then 90% of that capital gain, 90% of capital new cost of new asset should be considered, and whichever is lower should be considered. That's all. So when you say appropriate fraction, which asset was used charitable prior to such transfer. So whatever was subsequently before the transfer, you have to take that cost and then understand. So with this we conclude the first set of trust whatever we have in the chapter. So we will continue with the second sector in the next session. Thank you.